Good morning and welcome to Ask the Expert, an award-winning daily live show from 8:30 to 9 a.m. to help small businesses. If you have any questions, please do ask them in the comments of the live feed. And if you need any more advice, please do join the official Intuit QuickBooks SMB community group on Facebook, where there are accountants and business experts on hand 24/7. Now, during today's live session, we will be running a poll, so please do engage with it and I will reveal the results at the end of the show. A reminder that on the 3rd of March, you can attend the Intuit QuickBooks virtual event, which is called Quickbooks Connect. The virtual event brings entrepreneurs, small business owners, and accountants together to grow, learn, and connect with each other. Now, I went to my first Quickbooks Connect when they were obviously in person about 3-4 years ago, and honestly, my mind was blown. It's not just about the software, but you get such great advice from experts in all fields, business experts. So please do go ahead and join, and I will actually be giving a talk myself on the 3rd as well. So please do come and join us. So a little bit about myself, for those of you who haven't seen one of my shows before. My name is Eriona. I am the Managing Director of Majors Accounts, which is a small family-run practice based in South East London. I am a Chartered Certified Accountant with the ACCA, and I also have Masters in Law, in specialising in international banking and also in accounting and finance. And I've recently graduated from the University of Oxford with a postgraduate diploma in strategic finance. I'm also a member of the QuickBooks Accountants Council and a member of ACCA's Practitioner Network Panel and the SME Global Forum member for the ACCA as well. Now, I've been working in practice since the age of 13, so we're going back a while. And I've been working and studying at the same time, which I think has really helped to really put that theory into practice and find out how we can make a difference to businesses with, what we're learning, and really put it into practice. So whether that's how a business functions, its pain points, its goals, what they are for the future, whether it's to become more profitable, whether it is to grow, whatever it may be. So Majors Accounts, as I mentioned, small family-run practice based in Southeast London. We've been going since 2006, and we cater for mostly small businesses and self-employed individuals in a range of different fields and different sectors and industries, some being mainly construction, where we're focusing on those, the whole hospitality sector, so bars, restaurants, hairdressers, IT, nurseries, pubs, kind of pretty much every field I feel that we've had experience with. Now, I became managing director, although I've been working here since forever. I became managing director in 2019, and I implemented and spearheaded a digitalisation strategy within the firm with the idea of becoming a paperless office. Proud to say that we are now. You may see bits of paper here and there, but not like it used to be. Proud to say that we are a QuickBooks online only practice, and so we feel that we've become somewhat experts in this space. So now everything can be done online using an array of different apps that all feed into QuickBooks Online. And it's an elevated experience for our staff because they're using the cutting edge technology, but also it's helping us to provide a lot more information to our clients than we were able to do previously. So now clients don't need to come to the office. So we're fully digital, which has been super convenient during the pandemic. We were lucky enough to not have any issues with not being able to trade. We continued, after the first lockdown, everyone was working from home as usual. All systems were set up, working really well. And it allows us, obviously, not just the time saving for clients as well, but it allows us to have that, the national and soon to be global reach. So we've got clients from Ireland all the way down to the Isle of Wight. They're all over the place, and we feel that this digitalization process has really helped to bring that client accountant relationship a lot closer. I don't think we have that typical relationship with our clients, maybe because we are also family run, so we like to treat each other as much as we can like family, to help build a better rapport. Over the years, we've found that this works really well, and hence how we've grown organically to roughly coming up to 2,000 or so clients. So again, to provide that more personalized service and bring us closer and become the virtual finance director for our clients, but without the extra fees on top that come with that title. So in this time, our efforts haven't gone unnoticed. Majors Accounts have been nominated for 2 years in a row by the British Accountancy Awards for Firm of the Year, Greater London. I myself have been nominated for a few awards, so for Top 50 Women in Accounting, and I was shortlisted for 3 awards by the Women in Accounting and Finance 2020 earlier last year. Now, I think something that obviously everyone is thinking, COVID, the world has changed. We've got to a point now, we had some hope of every month we said, maybe next month, maybe we've got to a point, we're coming up to a year now. So we've accepted the fact of what's been happening, and so many businesses have really been hurt massively by what's been happening. But obviously this week we have had some good news with the vaccine rollout, so hopefully there is an end in sight. So we need to make sure that our businesses are ready for going back to normal, whenever that may be. Hopefully it's not too far now, but making sure that everything is in place to be able to go back. But at the same time as coming out of COVID, hopefully, there are other things going on, like such as Brexit and a few changes that HMRC are implementing, which so many business owners may not know a lot about, but they really need to, just because this will affect businesses massively. Obviously, one of the main ones, Brexit. So for anyone selling goods abroad, it's really relevant to understand that following the end of the Brexit transition period, the new rules regarding tax and duty apply to goods sent to the UK from the EU. So these changes are to ensure that goods from the EU and non-EU countries are treated in the same way, and that UK businesses are not disadvantaged by competition from VAT-free imports. So for goods sold directly to customers in the UK from overseas with a value of £135 or less, at the point at which VAT collected has moved from the point of importation to the point of sale. And online marketplaces that are involved in facilitating the sale are responsible for collecting and accounting for the VAT. So business-to-business sales not exceeding £135 in value will be subject to the new VAT rules, but VAT can be accounted for by the reverse charge process. And in addition, from the 1st of January, so a month ago, low value consignment relief, which was an import VAT exemption for goods valued at £15 or less, has now been removed, and normal VAT and customs rules on consignment valued at more than £135 will apply on the import of goods into Great Britain from outside the UK or into Northern Ireland from outside the UK and the EU. There are different rules if you sell goods to Northern Ireland from the EU or move goods between Northern Ireland and the EU. So please, if that does affect you, please do go ahead and find out how that will affect you. Now, something else which a lot of my clients have been receiving letters about is the ICO, the Information Commissioner's Office. Many of you may have received these. So the Information Commissioner's Office is an independent regulatory office in charge of upholding information rights in the interests of the public. So under the Data Protection Act 2018, all organisations that process personal information must register with the ICO. So by law, every organisation or sole trader who processes personal information needs to pay a data protection fee to the ICO unless they benefit from a very limited exemption. It's not too expensive. The cost of the data protection fee depends on the size of the turnover of the business or organisation. So there are 3 tiers of fee ranging from £40 to £2,900. This is for the year, but most businesses, the vast majority, fit under the £40 or £60. So if you are handling client data, please do make sure you go to their website and check whether that affects you and whether you should be signed up. If you don't, the fines could be huge. So it's well worth just having a look into that. Now, something to come into effect on the 1st of March is the V80 Reverse Charge. So there will be new VAT rules for building contractors and subcontractors. The new rules were originally expected to commence on the 1st of October 2019, but there was an initial 12-month delay because nobody knew, what this meant, and people felt they didn't have enough time to put everything into practice. And the start date was then delayed for a further 5 months until the 1st of March due to the impact of COVID. So the new rules will make the supply of most construction services between construction or building businesses subject to a domestic reverse charge. The reverse charge will only apply to supplies of specific construction services to other businesses in the construction sector. So this means that from the 1st of March, subcontractors will no longer add VAT to their supplies to most building customers. Instead, contractors will be obliged to pay the deemed output VAT on behalf of their registered subcontractor suppliers, and this is known as a domestic reverse charge. However, there is no loss of cash flow to contractors, as the deemed output VAT can be deducted as input VAT subject to any existing restrictions. In this way, the two entries on the VAT returns end up cancelling each other out. So HMRC's guidance states that invoices issued for specific supplies that become liable to the reverse charge, the VAT treatment for invoices with a tax point of before the 1st of March are treated with the same rules as they are now. Anything from the 1st of March, so on or after, is with the new reverse charge. So what do you need to do to make sure that you're ready? Your checklist. So make sure you and your staff understand the new domestic charge. Make sure your accounting software has been updated to deal with the domestic reverse charge, and consider the impact of cash flow. So for subcontractors, there will be a short-term cash flow because usually you would have got the VAT and paid it, say, 3 months later. So you would have had some time to really kind of use that money in the day-to-day running of the business before it had to be paid over to HMRC. You won't receive that anymore. So it's something to think about. And also speak to your CIS customers and suppliers and let them know about the domestic charge and make sure they understand the changes. Now, there are exemptions, so the reverse charge doesn't apply to suppliers of VAT exempt building and construction services, so things like new builds, and suppliers that are not covered by CIS unless they're linked to such a supplier are also exempt. And also suppliers for staff or workers also doesn't apply to this. And if they're a non-VAT registered customer, obviously they don't apply either. End users, so VAT registered customers who do not intend to make further ongoing supplies. Intermediary suppliers who are connected, for example, a landlord and his tenant or two companies in the same group, and also overseas customers. The last thing that I will talk about for customers who are having trouble with, making sure their tax is paid up to date, HMRC are being slightly lenient on this. So for self-assessment, for example, or any other kind of tax, there is a time to pay. You need to go on HMRC's website and you can set up the direct debit yourself. As long as the tax outstanding is not more than 30,000, you can set it up and spread your tax over 12 months. Now, there will be interest until the amount is paid in full, but at least you have a little bit of time and relief, so you don't feel that you've got so much to pay and you just can't do it. But you need to make sure that you set this up as soon as possible by going on HMRC's website and creating a Gov account if you don't have one already. So I'm going to start taking questions now. I see they're coming in. We have a question from Zane from Twitter who says, I decided to handle my accounts for my business myself. What time-effective tips would you give to minimize the risk for error in my work? I'd say get an accountant is the best way. I know that it depends on what kind of accounts you're talking about, because I know that some people are able to do, for example, self-assessments themselves by going on the HMRC website. It does direct you, give you a step-by-step process, but obviously that doesn't give you all the rules that you could be taking advantage of, and that's where an accountant will come in. For company accounts, I wouldn't suggest, unless you're an accountant yourself, I would not suggest that you take those on yourself. You don't actually, a lot of people don't understand the importance of an accountant and how much an accountant can save. I've had clients that have come to me that have said, I've been doing the accounts myself for all these years, but I'm getting to a point now where I want to focus more on the business rather than the admin side, so can you take over? And when speaking to them, we've seen that they have missed out on thousands and thousands of pounds of tax savings, which they're not aware of because, you know, the straightforward forms will not tell you these things. So it worked out that actually, if they'd have had an accountant and paid an accountant, the amount of money that they would have in their pocket is a lot more than they had up until that point. So definitely that would be my number one thing. Obviously, things like software to help you with record keeping, QuickBooks Online is fantastic for that, but that makes sure that your data is in order, but it doesn't give you the kind of rules that you can apply to help with tax savings. We have a question from Ashton from Facebook Messenger who says, "Morning, Eriona. I am a supplier of lighting and air conditioning. I'm unsure whether the V80 reverse charge for construction supplies apply to me. Will it apply to me?" So unless you're registered for CIS, and if you're supplying lighting and air conditioning, that's more of a service. You're not really kind of providing a construction or building kind of service. So I would say that wouldn't really affect you. If you have been running CIS, then yes, that will affect you. But based on what you're saying, I don't think that will. If you have an accountant, just double check with them. Hopefully they traveling expenses, if you're traveling during this period, I'm not sure how many people are, but there are still people depending on the businesses. Telephone expenses, internet, advertising costs, if basically there's all sorts, but anything that you would deem that you use for the business. And one of the main things, please make sure you keep the receipt for this, for any expenses that you claim, just because HMRC have the right to obviously check your tax return for up to 6 years. And if you're unable to provide the receipt, and I see a lot of people saying it's on my bank statement, it's clear that, for example, a builder might buy something from B&Q or Selco or something like that. If you don't have the receipt which shows maybe the company name or some proof, HMRC have the right to say, well, I can't see the proof, I don't know what you bought at B&Q, because you could have bought building materials or you could have bought you know, a nice lamp for your home. So they will want to see that, and they will say, they can say, if you don't have it, I'm going to disregard it, and you could face penalties and interest for having an incorrect tax return, which seems a bit unfair, but that's just the way it is. Just make sure, please, that you keep all of your paperwork. We have a question from Hella from Instagram who says, "Hi Eriona, what is the quickest and easiest way to appeal your late filing penalty?" So if it's for this year, so for the 1920 tax return that was due to be submitted on the 31st of January, there are no late filing penalties if you haven't submitted by that date, but you must make sure you submit by the end of February. If you haven't submitted by the end of February, then you will get a late filing penalty. And if you want to appeal it, then you have to write into HMRC confirming the reasons why you are unable to submit on time, and it'll be up to them, obviously, if they decide that, if they think that your reason is plausible or not. But if it's for previous years, I'm guessing your penalty should be pretty high right now, so you should be dealing with it as soon as possible. But again, it's by writing into them. It is taking a bit of time because the post that goes into them has to be scanned before it goes to the right department. So if you're not getting anything back straight away, just bear with them, because they are going through a lot of posts and a lot of things right now. But just as a reminder, if it is for the 1920 tax return, don't worry, you don't have one yet, unless you don't fill your tax or file your tax return by the end of February. We have a question from Stanis from Twitter who says, what VAT rates does the V80 reverse charge apply for? Will it apply to zero rated supplies? So zero rated supplies, no, but any other VAT percentage, yes. So you'd still apply the same VAT percentage. If there is VAT to pay, then the reverse charge applies. If it's zero rated or there is no VAT, then it doesn't apply to those kind of invoices because there is no VAT to be paid in the first place. We have a question from Gia from Facebook who says, good morning, my company is on the compulsory strike-off path. Does the month-long pause affect me as well? I have not received any notices from Companies House after the first Gazette. So yeah, there are, they have paused things. Again, they did at the beginning of the year as well to allow businesses, give them that extra time for those who are about to close or who might be going into liquidation because of what's happened. If you haven't received anything, I'd say don't worry about it. There is a process. You may well be caught out by the month-long pause, but things will go, will go transpire themselves. So if there are going to be any issues, you will be informed. If not, it's just a process that happens in itself, and you've just got to wait for it, unfortunately, until you get notification that it has officially been closed. We have a question from Shawcat from Facebook who says, how did the past year affect your business and what changes did you make? Oh gosh, us, like many other businesses, I think a lot of people forget that accountants are, run businesses too. And we've been trying for the past year to really focus on supporting our clients, but obviously we had our challenges as well. We were lucky that we were going through a digitalization process for a few 2-3 years before coronavirus hit, so we were kind of getting prepared without knowing. So but we were lucky that on the first lockdown we had laptops which we were able to hand out to all of our staff, and everyone started working from home the next day. So technically, we had no periods of time where we stopped working, so that was really lucky. But we had a huge extra workload that we had to deal with, mainly with furlough, which I think all accountants can't wait for that to be removed, because there is a lot of work that goes into it. It's not as simple as a quick 5-minute application. It's analysing clients' timesheets, trying to figure out, especially when it's flexible furlough, trying to figure out what usual hours are, how many hours they've worked, 80% of that. Some clients have left, some have said no, I want, some employees have left. So trying to figure all of that, it's been super complex. And I think when we first started, it was difficult to try and get our head around how the process was going to work, even with the applications and getting that information to clients. So that extra workload, we've had 3 staff have been taken off what they usually do to be working on furlough full time. And this is something that we've had to do in order to help our businesses as much as we can to keep them going, and also with their employees to ensure that they have some income and they're able to live. So that's been really difficult. I think also with the information that's been coming out on a daily basis, changes in law, we're going to apply this change, and then HMRC going back and saying, actually, no, we've decided not to put this into effect. So it's been difficult with learning everything and then having to say to our clients, explain it to them in human terms, shall I say, not in the legal terms, and then say, oh, sorry, no, everything that we told you, scrap that because it's not going to happen. So that's been difficult, making sure that we've been in communication with our clients regularly, but I think that's something that improved over time. One thing that really helped with us is that we've had an app for quite a few years, but it has been a godsend during this time, because we've been able to really communicate all of these things to our clients without having to communicate to each one individually. And then all we had to deal with were queries that came in after the information was kind of handed out to everybody. Obviously, one of the long-term effects from this, which we're really happy about and which we're going to keep going forward, is the flexible working. So traditionally we always worked in the office full-time, all of our staff travelled here. Now we don't need to. So we are going to be, from now on, having our staff working a mixture from home and or from the office. So they've really enjoyed that. We found that they've been a lot more productive because they have that flexibility. And going forward, say for example they need to go to the doctors, there won't be an issue of taking a whole day off. It'll be just a case of saying, guys, I'll be away from my computer for a couple of hours, I'll log in later. So that's been a welcome change, shall we say, due to, as a result of this. Now I'm just going to check if we have any other questions that have come in. So I think I can take a couple more questions from Mumtaz from Facebook Messenger, who says, hi Eriona, can you share some tips on how to account for seasonal fluctuations and trends when working on our cash flow forecast? I run an e-commerce business and Q4 has been our best quarter in terms of sales for the last 2 years. In terms of cash flow forecast, are you able, I would say, to look at ways of how you're ordering. If you're able to spread out the ordering so you don't have a lot of cash coming out in one particular month, if you're able to maybe build up some stock, but then you have to also consider holding costs and weigh up the difference on how this will affect you going forward. Will you have to be paying a lot for that? Is it worth it or not? There are quite a few different ways, which I'm not sure I have time now to go through. I think I have time but I would say definitely speak to your accountant for that, because they will give so many more suggestions depending on your business. I have one last question, unfortunately, from Hannah from Instagram, who says, good morning Eriona, I have a question regarding creditors and payments. I recently fell behind my payments because of the pandemic and lockdown. Understandable, as with so many other businesses. Do you have any recommendations for those trying to get back on track after missed payments? So a lot of my clients have had the same thing. If you're able to speak to your creditors, see whether there is a way of paying slowly, set up payment plans so they know that you are dedicated to try and pay these, but to give you some time, some relief for you to get back on track. Some people have managed to agree terms such as I'll pay you, say for example, they've had a few months extra of not paying anything, but they'll pay everything up front. Maybe it may even be worth, if you're able to do that, to say that you're willing to pay some interest as a way of enticing your creditors to give you some extra time to pay. So there are a few ways, but I think the main thing is just speaking to them. There are obviously loans that the government has provided and things like that to help you pay these off. But you just have to consider what the interest rate is for them and how soon are you going to be able to pay these. But that's something definitely to look into. So thank you so much for tuning in this morning. If you have any other questions, then please do get in touch with me directly through our website. We have a chat feature there. I'm usually on there all the time, so please feel free to contact me through there. We're also on all social media platforms, on Facebook, Instagram, Twitter and LinkedIn. And on our website, on the news section, we do have information that is added regularly as it is released. And also we have an app which you can download via the links on our website, which will give you a lot of information again to your mobile directly as information comes out. Now, coming up on Ask the Expert tomorrow is business strategist and all-round disruptor Ketan Makwana, who is the CEO of Enterprise Lab. So tune in to learn to learn how to develop a strong sales process and build a new client portfolio. Don't forget, do join the official QuickBooks SMB community group on Facebook, where there are accountants and business experts on hand 24/7. And also, don't forget to register for the Quickbooks Connect. You can find a link in the comments below. I've really enjoyed answering your questions today. I hope they have helped, and I hope you have a great morning and a great rest of the day.